So I'm delighted this afternoon to be with Daryl Norkett from Lendwell. So for those of you listening to us, whether you're listening live through Facebook or whether you're listening to us through my podcast, which is Brendan Speaks Property, I think we're on to about 40 episodes. So it's a relaunch of that particular podcast series or podcast, which I had a couple of years ago. So I'm really delighted we welcome Daryl Norkett from Lendwell on board this afternoon. So Daryl's got a vast knowledge. Look, I was very lucky to be introduced to Daryl. People ask, where did I get introduced? I have to admit, it was a broker who introduced me to Daryl. It was Piragesh. So I don't know how you and Piragesh met, to be fair. I haven't discussed that, but generally people involved in funding got good relationships with brokers. That's normally the way it goes. I have to admit, it was fascinating listening to Sam Norris today, who was talking about the importance of letting agents, which I never really considered being so important. But for Sam, they seem to be so keen. I mentioned Sam because, of course, Sam is going to be on my podcast, but he's also on our Monday morning sessions, which Sam has titled, not myself, but Sam, Brendan's Property Meet. So Daryl, I haven't even introduced you properly about your background coming from Shawbrook. For me, the most interesting part of it is head of products, which gives you a real vast knowledge. So it's not just residential, it's also commercial as well. And your background dates back, I think, to 2008, 2009. I might be slightly wrong on those dates. Barclays?
Yeah, 2009. So I guess I've only really known recessions and sort of flat markets. So I was never around what sounded like the very fun times in the sort of in the noughties and that. I was kind of school and uni during those years. So so I was at Barclays for 4 or 5 years, then at Shawbrook for a similar amount of time, which is where I met the rest of the team that have set up Lendwell, including Stephen Johnson, who was one of the founders of Shawbrook, and Karen Bennett, who's the managing director of the property team. And yeah, absolutely loved my time at Shawbrook. So we did get introduced through Piragesh at Tatum Finance. He's a really great finance broker, as is Sam Norris at Bond. And we were lucky enough at Shawbrook to work with some really good brokers who kind of really knew their stuff, which helped us kind of lend quite a lot of money and grow that business. And it was also a fun time to be there because it's just kind of a growing bank, in the wake of the credit crisis. And we were doing lots of stuff. We were doing bridging, we did development, we did buy to let, particularly the more complicated buy to let deals. We were quite early out the gate supporting HMOs, we did commercial. So really kind of helped to see all parts of the property market.
So Daryl, I have to admit, it's a topic which I've fallen in love with a bit. So I'm only going to do topics, or generally topics which I've got an interest in, not a financial interest. I'll be open. I've never invested in industrial, or not that I know of anyway. Not directly. It's a really fascinating subject. Why do you think property investors, property developers, and other property professionals should care about industrial? And obviously they do. Looking at the numbers, already registered for this coming Monday, depends when the people are listening, Monday the 27th of April 2020.
Yeah, I think it's a really interesting kind of niche of the market to be alive to. So most of the successful property investors and developers that I've worked with over the years and have been lucky enough to meet do a mix of stuff. So kind of if you sort of go on the internet and stuff, you see a lot of people talking about what their strategy is, what the right strategy might be. I've never really bought into that stuff, to be honest. I've always thought the right strategy is just the right deal or the right opportunities at the right time. And those things change. They go in cycles all of the time. So there was a point, maybe 6, 7 years ago where HMOs were the new in thing, and there was, a real need for rooms to be created, and there was a need to kind of bring that sort of asset class into a more upmarket space. And that's been really successful for a lot of people, but you can argue that perhaps that's a bit more saturated now. And so the opportunity is a bit harder, and your sort of ratio to tenants and rooms on spare room and stuff is very different to what it was 6 or 7 years ago. So I think industrial is one of those sectors that's been largely overlooked by most smaller investors and developers over the past few years. And I think a lot of that's just because they're not particularly sexy buildings, just sheds and stuff. It's hard for people to get excited about, the aesthetics of that sort of building. But we are going through an absolutely unprecedented time with the coronavirus crisis at the moment. And one of the long-term behavioural impacts that I'm convinced that this is doing is that it's accelerating the growth of online in lots of ways, including conversations like this, but also online shopping. So online shopping is not new, e-commerce isn't new, but we're seeing now that people aren't able to go to the shops. So those people who are perhaps nervous about buying stuff online are being forced to. So it's kind of breaking through that glass barrier and coming over some of the fears that people might have out there today around kind of using the internet to buy goods. So I think that means that e-commerce and online shopping was growing anyway, and now continue to grow. And this just accelerates that change. And that ties directly into industrial property because those businesses don't need retail shop fronts. So it's a negative for the retail market, but it's a positive for industrial because those businesses do need warehouses and they do need places to store vans and delivery trucks and this kind of stuff. So I think that it's really about industrial being the infrastructure that supports the growth in online trading.
So Daryl, in terms of industrial being an important topic, of course, we talk about COVID-19, the impact of COVID-19, the growth of the online sector, and the key thing to know, no one's got a crystal ball. But certainly, one thing has changed: the increase in online shopping, which may continue post-COVID because people getting used to online shopping, the benefits. One fascinating conversation I had with AJ Richmond, almost forgot his name there for a moment. I was on a call with him last week, but it's also on my podcast this week. Is something he was working on with a Manchester office. I know it's office rather than industrial, but it just shows delivery from a company. I think it was Hermes. So they were using modern technology to deliver goods. We're not talking drones or anything like that, but they were delivering goods using an app on the phone, which opened the car boot. So now that's online mail, from my understanding, but that could open doors and make it easier for online retail shopping as well, not having to deliver for someone to be there, but possibly deliver goods while someone's actually working, and just the app releases, from my understanding, the car boot for a number of maybe seconds. It's limited duration. Is amazing, that technology, and that could further advance industrial if it needs to be advanced even more. Look, there's going to be challenges. People going to say, and of course we're going to go through these challenges on Monday 27th of April. It's online from 10 o'clock in the morning. I welcome you to come online before that. From 9:50 I'm going to open the doors, but 10 o'clock we're going to open the event formally with Sam Norris giving the finance update and delve into the panel. I was going to say, for the listeners out there, you're going to be joined by a number of people. Alex Hearn, who's a chartered surveyor, who's dealt with, he likes to call them sheds. Lots of people seem to like to call them sheds. Kirsty Darkins, Susie Carter, and questions, rather than being asked by myself, asked by Aaron Yahara. Look, one thing I found fascinating at the commercial summit, I've watched some of the clips. You talked about two different types of commercial investor you believe there are. Do you want to just explain that a little bit more?
Yeah, so I think the commercial property market is sort of shrouded in mystery a little bit. So with the residential market, you can get lots of data. You can go on the internet and you can find lots of stats about house purchases, and you've got kind of Rightmove and all this sort of stuff. But with commercial, it's slightly different. So for me, the commercial property market, in terms of how much lending goes out the door to support it, which is a bit of an indication as to how much transactional activity there is just as big as buy-to-let, which most people would just not believe.
Is that's as big as buy-to-let commercial?
Yeah, they both do around 40 billion a year of new lending, or they were anyway, last year. Probably go down a bit now. But
Daryl, where do you see those figures? Are they sort of like public figures, private figures?
Yeah, so buy-to-let mortgages, you've got UK Finance, who replace the Council of Mortgage Lenders. So they're a really good source for information on how much buy-to-let lending is being done. And that stuff does get reported in the press quite commonly. Commercial's a bit harder. So there's a few sources. So there's Cass Business School do some really good reports on commercial. There's another firm called Mintel that do some kind of in-depth reports. But they tend to be kind of annual research publications as opposed to kind of a monthly drip feed of data. So bit harder to get hold of commercial stuff. But I think I spoke a little bit about at the commercial summit that we had back only a few weeks ago, actually. It feels like a lot longer, to be honest. Was that market is split between some really big stuff and some really day-to-day stuff. So some of that market is kind of £20 million office blocks in Canary Wharf and stuff like this. And they're the big transactions. They're the ones that get the press, and they're the ones you'll see on kind of BizNow and all these other kind of websites, these kind of landmark transactions. And quite often they're bought by pension funds or property funds and hedge
Such as
funds.
Legal and General, LNG.
Yeah, and Aviva and these kind of funds. So that's like a market that, in my world, dealing with kind of smaller property investors and developers, kind of family-owned businesses, they can't really access that market. So sometimes people just think, oh, that's not for me. But actually, there's a whole market below that of smaller local stock. And that is the market that's always been the one that kind of I've let into. And I would argue that market will behave very differently to the big market. So if you look at kind of trends for commercial property, broadly speaking, retail values are expected to fall, office values are expected to kind of stay roughly the same, and industrial values are expected to go up. Now, that research was done before the coronavirus hit, so you can kind of chuck it all out the window to a certain extent. But all I think it's going to do is kind of accelerate that difference between retail and industrial, where industrial will just grow even quicker and retail will fall a little bit quicker than it would before. So for the kind of day-to-day investor and developer, I think it's all about kind of knowing your area, what sort of businesses are in your area, what the kind of local population's like, where the little niches are. And, looking for these opportunities where you might have a shed, as Alex would call it, but actually that shed could be a warehousing facility for a retailer. And it's these kind of things. And then on the retail side, that's kind of interesting as well, because there'll be plenty of retail units that are viable in some way, shape or form. So, does coronavirus mean the end of going to get your hair cut? Probably not. I reckon hairdressers are going to have a boom at the end of this. I mean, I know I'm certainly getting worried at the moment about whether I'm brave enough to let Laura, my wife, cut my hair or not. So not sure if it's worth the fallout yet. So that sort of business will carry on. Corner shops and stuff, it's always going to be convenient shopping. But then there'll be other opportunities where there'll be retail units that are just no longer viable. And that's still an opportunity. So you might not want to buy it as a commercial investment property, but that's a development opportunity, because under permitted development, you might be able to convert the rear of that shop into an extra flat. You might be able to repurpose it so you can keep a smaller shop at the front, so you preserve the high street in your local community, but at the same time are able to create value in the asset through residential space at the back. So I see opportunity in industrial, I see opportunity in retail. I kind of see opportunity everywhere, and it's just trying to predict what some of these changes might be.
So Daryl, fascinating conversation. Of course, we're going to go into a lot more detail on Monday morning. It's at 10 a.m. or just after 10 a.m. We've got a panel session, as I say, yourself, Alex Hearn, Chartered Surveyor, one of the exhibitors at the Commercial Summit as well. I didn't think we'd be talking about commercial so much, to be fair, but by a long way post-Commercial Summit, and also Kirsty Darkins, Susie Carter. Now, in terms of Lendwell, relatively new to the market, Stephen Johnson, I know, is going to come on board on the 4th of May, and that particular discussion is focused on the economic situation post-COVID-19. For those who don't know Stephen, he founded, I hope I've got this completely correct, founded Shawbrook with his father.
Yeah, part of a small team that founded Shawbrook. Karen Bennett, who's one of the partners at Lendwell, was also there at the start with Stephen of Shawbrook.
So how does Lendwell differ to Shawbrook?
Yeah, so we're not looking to kind of build another bank. So Shawbrook's quite a successful, mature specialist bank now, and mostly doing mortgages with a bit of bridging and development and stuff around it. And that business posted some great results yesterday, and it will carry on kind of going full steam ahead, I'm sure. But for Lendwell, for us, was an opportunity to create something a little bit more flexible. So a smaller lender, non-bank funded, with the ability to kind of look at a deal on a case by case basis rather than trying to kind of manage a big sort of tick list book of loans that all sort of need to conform one way or the other. So we very much are interested in bridging loans, we're interested in development exit finance, and we're very interested in kind of any refurbishment and light development deals. And we're continuing to lend through this period. So very much kind of open for business. It's not business as usual, as some people would say, because there are lots of kind of operational and logistical challenges as well as kind of considering the risk on various deals. But still very much open to look at opportunities and still very much keen to continue to lend money.
Now, I just want to say a massive thanks, not just for today, for taking time out, also for taking time out on Monday. As I say, already about 80 plus registered. I'm slightly surprised because industrial is a niche subject, but it's much more popular subject possibly than it was pre-COVID. I don't know if you can say pre-COVID-19, but I'm just saying it anyway. So, look, massive thanks. Join us on Monday morning, as I say, this coming Monday, Monday 27th, and then May the 4th, which I think is a bank holiday, but it's, for most people, it's not really a bank holiday anymore. May the 4th is focused on the economy. We've got Adam Lawrence there, Manish Kataria, Gavin Gallagher as well. He's not flying in from Ireland. I was going to say that, but he's going to be remote from Ireland. So no one's flying in at the moment. We don't want to go into oil and talk about oil because I've already discussed that with Manish Kataria yesterday, and that will be on my podcast, Brendan Speaks Property, as well. So Daryl, just a massive thanks for taking time out this afternoon.
Yeah, thanks, Brendan. Lovely to talk, and I'll see you on Monday morning.
Thank you.